Welcome back to part 3 of doing the numbers of our printing business. Quick reminder as to where we are. Our first balance sheet got us up and running and ready to start our business. We ran the business for a year and we produced an income statement. We then processed the numbers in the income statement to produce the balance sheet at the end of the year. And where we left off is I suggested there were a few bits and pieces that we needed to tidy up. So specifically what we need to do is we need to pay this supplier. We've got to the end of the year and we haven't paid them, so we need to process that transaction. We need to repay some of the debt to the bank, because that's typically how a debt or loan works. We paid interest only, but we haven't paid capital, or repaid capital to be specific. So we're going to do that. And we are also going to process a what-if scenario that relates to the sales, and if our customers paid us on 30 or 60 or 90 days, etc., how that would affect our balance sheet. All right, so let's start off with the creditor. That's a nice easy one to do. We're going to pay the creditor, so we're going to subtract out of our cash 250,000 Rand, and then this number can simply become 0, and that implies that the supplier has been paid. Right, so again you see this double transaction taking place. The next thing we're going to process is a repayment of some debt to the bank. Now typically the way this debt works is the repayment period is related to the timeline of the vehicle or the asset that it's financing, and in this case it's the vehicle. So I'm going to come over here, I'm going to put it as a capital repayment, and I'm going to calculate it using the original loan, which I am going to divide by the 4 years that the vehicle works for us, and that gets us a number of 125,000 Rand per year. So therefore we can come to the debt amount here, and we can subtract from that the capital repayment in order to get the amount after we have repaid the capital. Now we need to process this transaction through the cash as well. So here we can subtract from that the capital repayment, and that will adjust our cash, and then our balance sheet will remain balanced. Okay, so that's creditors done, and that's the debt capital repayment done. The next piece, I want to look at the customers, and I'm going to make an assumption here for my debtor days that my customers take 30 days to pay. Our current assumption is that customers pay cash on delivery, which is effectively a debtor days of 0. And if we're going to change this to 30, what that means is all the sales that were done in the last month of the year, let's say that's December in the case of this business, following a calendar year, we would then say, well, they've paid us for 11, and the month of December they haven't paid us. So we can do a calculation here where we might say, let's take the sales for the year, let's divide that by 365. That would give us a sales per day. And then we could say, well, once you've got a sales per day, what if you multiply that by 30 days? And that would give us a pretty good indication, not precise of course, but a pretty good indication of the sales that we do each month. And we're going to say, why don't we assume that we did this amount of sales in December? We can then calculate from using the R1 million in total sales minus the portion that hasn't been paid to us yet. We can determine the portion that has been paid to us. In other words, the cash received. So when we did our cash calculation here, we had a whole lot of transactions that were going through here. We started with the 250,000, and we processed some dividends and some tax and interest, expenses. And here we processed that the customer paid us R1,000,000. That was in cell J4. So we added plus J4 here. But instead of adding the plus J4, I want Excel to add this one down here, which is J23. So I'm going to tell Excel not to use that one, but to use this one. And let's see what happens. All right. So if we put our trace precedence back, we can see Excel now is using this number instead of that number. And of course, our balance sheet now doesn't balance. So we need to correct that, because now we need to introduce a debtors number. And here the debtors number is this portion that has not been paid to us. And this is an asset in our business, money that customers owe us. And now you can see our balance sheet balances. That's fantastic. Now we can play with this if we want. We can say, what if customers, instead of paying us on 30 days, paid us cash? That means our debtor days would be 0. And there you see, you've got no debtors outstanding, your debtors is 0, and you're receiving R1,000,000 in cash. 30 days, that was the scenario we just had. Now what if customers took 60 days to pay us? Well, there will be a bigger debtors amount. Customers would owe us more, and our amount of cash on the balance sheet would be less because we haven't been paid. Okay, so if we made this 90 days, we would see how the debtors gets bigger and the cash gets smaller. Maybe your customers take 120 days, around about 4 months to pay you. And what you're noticing is how the debtors number gets larger and the cash number on the balance sheet gets smaller. You could find out. Let's add another 30 to that. That would put us at 150 days. At what point maybe does our cash go negative? 180 days, that's quite a long time. There's our cash is not quite negative, but maybe at 210 days our cash might turn negative. In other words, we'd run out of cash if our customers took that amount of time to pay us. But fortunately, we've got good customers that pay us on 30 days, and we can use that number. But what's important about that debtors number is just to recognize how by changing one of what we call the working capital items on how long customers take to pay us impacts on the cash. And that's something we're going to look at in more detail as we progress on our journey. So we've completed our entire income statement balance sheet example of doing the numbers. What will come next in the journey is I'm going to ask you guys to have a go at this. To use an analogy, I'm going to say put your swimming cozies on and get in the water and start splashing around and learning how to swim and get going, because that is the only way that you can really come to terms with this. So we'll see you in the next video.